For the next 45 minutes, we are going to be talking about trusting disruption, thematically how to build a crypto finance structure. So thanks to our sponsors, Deltec, for providing this incredible space. I know that we have been in this space for a while, and I'm going to let you guys introduce yourselves, introduce what you're doing now in finance, but also, Matt, I got to start with you. Matt is from Coinbase, everyone. But I talked to your boss, Larry Fink, maybe a couple of years ago when he was in Asia and I was in Hong Kong. This guy is an innovator, but how much innovating is he making in this space? You left from the hedge fund side, now you're on the sell side. So if we can kind of get a sense from all of you what we're all doing in crypto.
Yeah, so I'm Matt Boyd. I look after Prime Finance for Coinbase. Prime Finance for us means very much more like a traditional prime brokerage offering as a starting place, but then something that extends into more of a crypto-native ecosystem. The reason we talk about it as a starting place from a traditional sense is really as a bridge. Coinbase, as many people know, is trying to act as a bridge between the traditional economy and the crypto economy. And we see the activation of institutional investors, which is over a $200 trillion market, as being really important to getting the crypto economy going. When we talk to institutions, the thing that they lack are efficient tools for trading, efficient tools for leverage, efficient tools to express negative views in the economy. And so that's really what my team does, is focus on how do we make that easier for institutions to get into the space and to activate in ways that lets them fit into their existing ecosystem.
David.
Great. I'm David Olsson. I'm the global head of institutional distribution at BlockFi. BlockFi is a financial services company in the crypto ecosystem. We have a retail offering, which is essentially wealth management services for them that ranges from an interest account, earning interest on their crypto-backed loans, trading from one crypto to another, and a crypto rewards credit card available in the US. And on the institutional side, we have a platform, BlockFi Prime, where our clients can access, borrow coins, trade, finance in a capital-efficient and frictionless way. And we have a different metaphor to Coinbase. We say we're making crypto backwardsly compatible to traditional finance. So making it a seamless transition for institutions to get into crypto and invest into crypto.
Greg, you're hanging out in Cayman.
I'm Gregory Pepin. I'm the CEO of FinNet and also senior advisor and chairman of Delchain and Diam with Deltec, sponsored here. What we're trying to do at IO is to try to build up the market infrastructure to democratize finance. We're talking about institution and retail, but we believe that the blockchain technology allow to open access to finance to everyone at the level of an institution, but for retail as well. So that's what we're trying to do.
Jack.
Yeah, hi everybody. My name is Jack Levy. I work with AscendEX. So we're a centralized exchange founded out of Singapore in 2018. Now obviously more global. We're really trying to bring DeFi offerings to CeFi users. Right? Not everybody is capable of getting a MetaMask or a Phantom wallet and going and trading in DeFi, but we try to make it as easy as possible for both retail and, in an eventual state, hopefully, institutions to actually start interacting with DeFi. So I'm director of listings, so working with all new projects on the platform.
Thanks. Shawn.
Awesome. Well, good afternoon, everyone. My name is Shawn Egger. I work at sFOX. I head up the execution services for sFOX globally. I have about 15 years of electronic market making experience. And at sFOX, we specialize in OTC, block order transactions, smart order routing, and overall execution quality.
So how many of you in the audience came from traditional institutional space? Show of hands. Okay, welcome. Did you get here 2 years ago? Show of hands. Okay. A year ago? 6 months ago? 3 months ago? Okay, so you guys have been here much longer than that, or just got here? Just got here. Who just got here into this space? Okay, so long time. And that's really kind of what we're talking about. As we see this movement from the traditional side, the institutional side, the world that we all participated in, the world that I reported on, and suddenly, fast forward a couple of years, we've been in this space at Forkast for almost 4 years. We built it when, after the ICO crash during crypto winter, nobody believed in it. And a lot of you did, of course. But now we've accelerated here. Help us understand, all of us kind of understand, how did we get here? What do you think was the impetus, would you say, Shawn?
Yeah, well, I think if we just go back to October 2020, in that time frame, fall of 2020, I mean, Michael Saylor purchased 20,000 at the margin Bitcoin. And shortly thereafter, PayPal was involved, Square was involved, Mass Mutual got involved. So then you go into 2021, and you've got Tesla and a whole host of other names. And what's amazing is, like, I just remember every other week there was just another institution, Guggenheim, and a lot of it was fluff. Not to say that Guggenheim is fluff, but a lot of the stuff was just more marketing. But
right.
It was real. It started to become very, very palpable, and that's what we've seen on our end from a service provider, from a counterparty perspective. We started seeing RIAs come in 2021. We saw the banks going to a second level of exploration. Their first level of exploration probably started years ago. A few banks like Goldman are really the only single bank, to their credit, went out and did it, right? But everybody else sitting on their hands. But that 2021 really was when the banks started doing deep dives. I'm sure with Matt and his team. I'm sure with the BlockFi folks and everybody on the panel.
Yeah.
Right? So that's my experience, and I think that's, again, you could go back to the institutionalization, but it's really the catalyzer, if you will, the fall of 2020.
Also, the notion that corporate treasury 1% to 2%, and then Tesla's move, Elon Musk's move.
But there's one thing, though, that we need to remind ourselves. Money brings money. 3-4 years ago, a lot of large banks, and we've been dealing with them through Deltec, they were hoping that crypto will die. Let's call it what it is. Sadly for them, it didn't die. And at the end of the day, you have shareholders to please. So that's why you started to see banks we know banks like BNY, for example, hate crypto, and I've seen them hating crypto to the core, but yet they're getting into crypto.
Yeah.
Why? Because they have no choice. So what really happened is that during the crypto winter, surprisingly enough, crypto didn't die. Why? Because there's a lot of diehard crypto fans. There's a lot of exchanges and OTCs that actually bonded together and maintain the chip there. And that's really what saved, I think, really changed the curve. And all of a sudden, banks, they're like everywhere. They go there because money is there. So they have to, all of a sudden, it becomes the next big thing. But that's actually all the trading capital side of the bank. But when you start a deal on the other side, which is still the traditional banking, they're still not there yet. So that's what I see also helped. There's the Michael Saylor stuff, et cetera, but it's also because at one point in time, banks will always go after where the money is. And that's where the money is now. And that's why they came into it.
Well, I can tell you, from our vantage point in Asia, all the family offices, the VCs, the investors there, they're hungry to get in this space, but they're already there. I mean, it's been a 2-year migration in Asia. This is nothing new. And when 40% of the average Asian portfolio sits in alternative assets and cash, I mean, that is a huge access to a lot of generational wealth that's moving into the space. How are you guys positioning?
I was actually going to answer your previous question,
go
if that's
ahead.
all right.
Yeah,
I had a point to make there, which is I think that from a hedge fund perspective, the seminal or watershed moment was when Paul Tudor Jones published his piece in May of 2020, and he said Bitcoin will be the horse to back, and he had a long explanation or a decent, reasonable explanation in terms of macroeconomically why that should happen. And hedge funds hunt in packs. That's the one thing I know from 20 years in traditional financial services. So that gave the blessing to a lot of people that had been quote unquote, in the closet in terms of their participation in crypto. and on the PA side, maybe even setting up SPVs with a few different friends and trading that way off of investor balance, not on the investor balance sheet, but on their own balance sheets. In terms of how we're positioned, I think that you have to, at least as BlockFi and the markets that we're trying to go after, is we want to position ourselves for a product that's appropriate for each kind of institution. So there are quantitative hedge funds that all they want from us is balance sheet and the ability to lever and run their strategies efficiently. There are hedge funds that want to execute through us. They may want access to different coins. They may want occasionally trading ideas or market color. For family offices, we've done this multiple times where we've taken a family office from zero, from the idea of, should I be investing in crypto? We hold their hands with a white glove service, and we say, okay, we're going to explain to you exactly how the blockchain works and how crypto markets work, and get you to execute your first trade. And we've done that multiple times. Some of them have even come on to become investors later because they've enjoyed the experience.
I mean, we talked about signaling, right? What about the talent migration? And Matt, I would almost, point to you as one of the incredible minds in hedge fund and quant space, and now you're on the sell side. Do you see the migration, more and more migration? I mean, all of us, really, quite frankly, probably everybody in this room. What other signals should everybody be looking at? Have we missed? If people aren't participating right now, what's the next wave of signals?
So I think there's a two-part answer to that question, and I'll start with the talent side. I think what you're seeing from a talent perspective today is an opportunity for people who are risk managers to do something entrepreneurial and to build something real in an entrepreneurial setting. That does not exist at banks. If you look at the tech spend of like a JP Morgan, I think 80% of it is on regulatory stuff. Probably the other 19.5% of it is on how to get all their different systems to talk to each other. And then they get to do innovation with a little bit of things. And they have a huge tech spend. It's amazing how many engineers work at JP Morgan. It's a great financial institution. I'm not bashing JP Morgan at all. It's just where the industry is in traditional finance.
Yeah, but they still don't give access to their institutional retail clients to crypto.
Not yet.
Not yet.
I think that'll come. But going back to the talent question, so there's now an entrepreneurial place for risk managers to sit that is not just put my name on a shingle and try to manage money, which was, you saw a mass exodus from Wall Street to hedge funds kind of through the 90s and 2000s. And so that started to shift because there's more opportunity here. And then the second part of your question was really about I think if I take a step back, was about what's changed that's driving that to an extent. So I was at a project during the ICO boom. I brought a token out at the hedge fund I worked at in 2017. My job was launch a Cayman Master feeder structure, prime brokerage relationship, portfolio optimization, trade execution strategy. And by the way, we got to get this ERC20 token up and running. And I was like, okay, those two things are really hard, but what's an ERC20 token? I had no idea. There was so much what was commonly referred to then as vaporware. It's kind of like the pets.com of the 2000s. And what you've seen through the crypto winter, and I think really accelerating with some of the new blockchains, with the change of Ethereum to proof of stake in future, is real economic use cases in a Web3 world that's driving opportunities for investors to deploy their capital into real economic endeavors, not into Ponzi schemes. And that's a really big shift that's occurred, over in the economy. And what you had, if you go back to the Paul Tudor Jones moment, the MicroStrategy moment, et cetera, the world was only focused on Bitcoin and ETH then. And if you could deliver Bitcoin and ETH, you were light years ahead of everyone else. And now when we talk to our clients, that's not enough.
Yeah.
We have clients asking us for 500 coins to go long short, and we're like, there's not a market for 500 coins to go long short, just to be clear. That change in the economy is really a major shift that we've seen.
The shifts are accelerating almost. Jack, what do you think are the big buy signals right now?
Big what?
Buy signals for those who are still sitting on the sideline? Because right now it looks either cheap or scary.
Yeah, I mean, I think that people are, holding in stables more than they were. I think that that's also kind of put a pause to that kind of mass migration that you kind of saw last year, right? The market was super hot. Everyone was really excited. A lot of people that weren't in the space were just hearing about it everywhere, right? All the news outlets were talking about it. Now, it's changed a little bit. It's not as public, right? BTC is trading up and down around 40 now. You have Ethereum around 3K now. Then you have Sol and you have all these blue chips. But, when you move down the list of all these other tokens, right, that's what people are starting to actually kind of want to get involved with. So it's a matter of how can they actually do it, right? So it's a matter of learning about those things. So I think that the more that we can actually talk to institutions, to these people that aren't in the space, and teach them about what's actually being built, that's how we'll start onboarding more and more users.
So let's talk about that. Now we know how we got here. What are the challenges that we face? How does one build a crypto-based financial system? Is this a parallel system? Is there spillover effect? Is it a mirror system? Or is it something else entirely? And how do you view this space as you're trying to speak to your colleagues and peers who don't quite understand that this behaves and breathes very differently than the traditional world?
Yeah, I think that there's going to be two worlds moving forward, right? And then actually there'll be three. There'll be the traditional, what we call TradFi, which when I talk to new TradFi, people, they always get a chuckle that we've come up with a nickname for them. But so we talk about the TradFi guys, and then you're going to have the digital world, and then you're going to have the convergence of both, right? You're going to have a hybrid of the TradFi digital world, and at some point you may go back to 2 lanes, but I think you're going to have 3 lanes for the foreseeable, let's call it intermediate future. And what we see is very interesting. We see that the institutional. I mean, it's probably really good to level set the definition of what institutional clientele means, because a lot of what Matt was referencing in terms of the token demand and David concurring. The reality of it is that most of the institutions that are probably in the audience today, and this isn't to take anything away from your risk appetite, but you are going to be dealing in Bitcoin. You are going to be approved for Ethereum. And it will probably be that much more challenging to get compliance to have you approve you to trade Solana and Aave and some of these other really exciting kind of layer 2 and layer 1 projects. So again, with that institutional crowd, what we see with these folks is we see them demanding services, bundled solutions, end-to-end solutions, execution services, prime services, something that's more akin to what they're accustomed to in the traditional world. And for many, many years, with the exception of a few on the panel today, those services aren't really available in an efficient manner. Does that make sense?
The white glove needs to happen, right? People are still very hesitant because they're not educated, but they do know they want skin in the game. So to your point, how do they navigate? Because it doesn't look like anything that they know. Custody is another big issue. Thoughts there?
But just to rebound on what Shawn said, you need to see what is the difference between traditional finance and digital finance. First, what is really interesting is on the crypto space, you can have 2 people transacting together without having to go through an institution. If you want to buy a stock, you need to go through a broker.
Right.
If I want to buy your Bitcoin, I don't need to go through a broker. That's a paradigm that people still need to wrap around their head around. The second thing that is really interesting is availability of data. Right now, if you go on any exchange like AscendEX, FTX, and others, anyone can have access to that data. Anyone. While today in traditional finance, you need to be a big hedge fund to get access to that data. That freedom of access is very valuable because it put everybody on the same playing field. And what is really interesting now is you see that we're talking about institution, but there's a bunch of traders that started as pirates. Nobody trusts them. And now they're big enough to actually become an institution to itself. And they're treated like institution. And it's actually really interesting because you start to see competition between those new type of institution and the old guard that is getting into. But even in the field of brokerage, look at that. Those people are new companies that establish themselves as brokerage firm ahead of a Citibank, a BNY, and a JP Morgan that missed that field now. And now what's going to happen is that going forward, those firms are going to try to offer the same white glove they're doing. The difference is they have the expertise in crypto that those people don't.
Right.
And I think that there will be a question at one point in time that the business model of those banks was pricing data, all those information that had a cost that they were giving to institutions. This is not the case in the digital space. And that will be interesting to see how the brokerage firm in the digital space will continue to go into a business model that no banks know how to get into, because that's not their business model.
But I mean, you just talk about an entire industry missing the boat. And all of you on stage are almost indicative of that all of these services are actually being developed and progressed and innovated not by the big banks, but by you guys. And so what are we going to see over the next couple of years? Are we going to see a migration from that traditional space? And if you're in traditional finance, and if you are wanting to participate, I mean, are you scared right now?
Well, I just want to touch on what you said about that in terms of us being here versus the banks. Crypto has been an incredible generator of entrepreneurship. Why? Because if you saw in the regulated world and TradFi world, even banks, lots of consolidation, hedge funds, lots of consolidation, assets flowing to the largest. And in crypto, it's the opposite. Actually, every day a new company pops up. You want to do something slightly different, you actually leave and you start a new company because it's more efficient to get things done that way. And so, I think that it'll be interesting to see what comes next. As we get regulation, I think you're going to see that actually reverse. So you got the big bang, lots of little, solar systems and lots of companies, and then you're going to see consolidation happen. And I'd like to think that would be good for the bigger players in the space, and we'll see a kind of commonality come out of the very fragmented infrastructure and ecosystem we have now.
Yeah, I would just add to that make no mistake about it. Like once that box is checked, the banks will be coming in droves. Mm-hmm. The asset managers will be coming once we solve the workflow problems that just haven't been solved for. No one's discussing it, right? BlackRock announced they're getting into an ETF, a blockchain ETF. Great. Are they going to invest in the underlying? Well, they've got 1,000 sub-accounts. When they come in with the block order, who in crypto today can service that downstream workflow? And the answer is no one. Frankly, absolutely no one. Can a technology be merged? To David's point, what's going to happen is you're going to check the box in regulation, the banks are going to get involved, other FIs are going to get involved, and or financial institutions and asset managers, and some of the more conservative hedge funds, they'll all get involved. There'll be acquisitions, there'll be mergers, right? Someone like a BlockFi would be a ripe candidate for a bank to purchase their entire stack. I do cap intro for these guys. or even someone like ourselves where we've got this unified stack, right? And you want to go to market and you're already behind. You can't say you're 13 years behind. You could say that they're 3 or 4 years behind, with a straight face. So by the time they get the regulatory check, let's hope, knock on wood, that happens somewhere in the next 12 months. If they want to go to market quickly, they're going to have to go through acquisition because to everybody's point, there's been a great migration of talent. I don't want to say an exodus. These banks have some fantastic quantitative talent. I've worked with them in the past. I've hired them. And I got to tell you, it's just a function of time. Mm-hmm. And once the regulatory box is confirmed, we're going to see them come. And we're going to be ready for them.
So let's say they're here. That's a great signal, by the way. That kind of paves the way. And there's still time, obviously, for building and innovating and preparing for that moment of mass migration. But secondly, let's say you're already here, and now you want to trade. You've got 100 BTC order. Who are you going to trade against in this environment? This is also a challenge in the space right now.
It is. Let me jump in. I just want to say I have to jump in on this one because this is where we shine. This is where my expertise comes from and where my passion comes out. Because right now, where that 100 BTC goes, where does that go today? It goes over Telegram, which is the equivalent of Bloomberg, which I know many of you TradFi folks, most of your guys, if you're trading exotic emerging markets, large block orders, you may go on Bloomberg and do a good portion of your workflow. But it's the 21st century. This is blockchain. We're talking Web3, we're talking DeFi, and the fact that 100 BTC, and this is not, we work with all the best OTC partners out there. We do. But the fact that 80% of that type of large block volume goes through Telegram chat astounds me every day I go into work. And I tell you, it's because there's depth, there's breadth, there's a whole host of reasons of why but yes, we solve for problems like that. We built out liquidity pools, we built out algo execution, smart order routing, intelligent matching, post-trade, pre-trade, post-trade analytics. These are the things that the asset managers, the fund managers are going to ultimately want to have to be able to feel comfortable to trade 100 BTC. And until they have that, they're going to be reticent to do it. And when they come, they're going to be highbrowed, as I said earlier, right? Just like I was. Say, wait a minute, wait, come again. So 500 Bitcoin is going through to one guy, and you're asking for a one-way offer, and that's the market? What century is this? What century is this?
Just to build on that too, I think talking to lots of our clients with different sorts of hats on, different types of clients who are transacting in size regularly. Something from like my old life that I cared a lot about was execution quality. Execution quality was like preeminent. That's where you gave away all of your potential alpha. Today, even though the majority of, not all, but the majority of OTC desks are trading on a principal basis, a lot of people don't care yet, which is crazy to me, to Shawn's point. Like, it is very antiquated. And it's because the execution quality with the asset volatility we have right now is not quite as big a deal. It's the same reason you're not seeing a whole lot of leverage in the system as it sits today. The reason traditional finance funds use leverage is to increase their volatility, because their risk models are so good, they've got like a alpha that they're capturing, but their vol's too low, so they can't make enough return. That's why they use leverage, right? And our vol is so high, they don't need a lot of leverage. Like, they can do that without leverage as it sits right now. So I think, though, as we bring liquidity to the market, as we mobilize dormant inventory that's just sitting in custodians, us and others, everywhere around the world are just sitting there being hodled and very inefficiently used, you'll start to see spreads compress. You'll start to see commissions come down. You'll start to see real liquidity in these markets. Execution quality will be preeminent at that point, because that's where you'll lose your alpha.
But there's still, remember again, you're in difference between traditional finance and crypto, 24/7.
Yeah.
Sorry, but the traders start on Monday morning at 9, finish at 6 or 4. Doesn't happen in crypto. Most of the time, it's actually in the middle of the night that the crap shit hit the fan. That's a problem. The second thing you have is you don't have a single order book. You have as many order book as there is exchanges, as many order book as you have OTC. Traditional finance are not used to that. Crypto traders are. That's what is really interesting, is even if you take a trader from the traditional world, it's a complete new playing field for him. It's 24/7, it never stops. And they need to learn a big difference that they don't have in traditional finance. Volume and liquidity are completely different in crypto. When people say, oh, my token has a lot of volume, we don't care. Because what matters is the liquidity, and most of the time, when you have those big orders, the liquidity run away quickly, and it's a crash. And then finally, remember in the fiat world, when you hear where the crypto market crashed, it's also because they don't have the same safety net as the traditional market where it's hit minus 10%, it stopped.
That's
so
right.
people get back their mind. No, in crypto, it's cleared up in half an hour, they clear it up, it's minus 30%, the wash is done, let's move back to something else. That is something that a lot of traders are used to it, but people coming from traditional finance, and I'm sure that you guys that came from there at the beginning, it's something you're not used to. Because when you close your computer on Friday night, it's actually not over. The will continue. And it will continue without you.
That's right.
I just want to add, so crypto markets are 24/7. They trade about 5.5. So if you look at New York Stock Exchange, for example, 9:30 to 4, crypto markets trade something like 5 times as much. It's 5 times as much opportunity to make alpha. So that's why it's a great asset class for institutional investors to be in. And I think that actually just coming back to Shawn's point, as I was just thinking about it, like my my thinking about TradFi versus cryptos, I actually think crypto, because of the sophistication of the markets and the way that it's evolved, because it's a much better system of settlement, of trading. You know, you get rid of sort of some of the the clearing problems that we saw with GameStop and AMC over the summer. I really think that there's going to be like a sudden sea change before people know it. That you're going to see, it'll be like Blockbuster and Netflix. They won't even know what's happened to them. And obviously I'm talking up kind of my own book here, but I really think that unfortunately for the people that are quote rent seekers, it's just the change is going to happen so fast that they won't be able to keep up with it, and valuations will mean that they won't be able actually to acquire firms in the crypto space.
And just to add to that, I think that an exchange in crypto is very different than an exchange in TradFi, like the New York Stock Exchange, right? An exchange in crypto, right? We're a broker, we're a lending and borrowing entity, right? We do custody, we do clearinghouse, we investment banking help, integration partner. There's so much more to a crypto exchange than there is, right? When I'm trading like a normal stock, right? There's like 5 or 6 different people that it actually goes through, right? In crypto, it's all consolidated into one. So it will be interesting to see, will one move more towards the other, or will we maybe sort of start splitting up things in crypto, or will traditional markets kind of realize, it's more efficient if everything is happening under one roof?
Does DeFi undermine all of this?
No, I mean, I think that DeFi is very cool, right? I think that there's a lot of really cool things that are being built that, most people not in the space don't even know about it, right? They're not following along. They don't know what's happening. They don't know about the next ecosystem being built, right? I'll give one example, like NEAR is being talked about a lot right now, right? But most people still don't know what NEAR is outside of crypto. I think that there will be a place for DeFi. It's just kind of unfortunate that, at least for institutions, there is no prime brokerage for DeFi, right? There is no real way for these institutions to take advantage of things like staking pools or DeFi yield farming or yield maximization vaults, right? All these different things that, we can go and trade and make 15, 20% on a pool. Institutions don't have access to that. So it's a matter of figuring out a way to actually allow them to then get involved, both, I guess, from a regulatory perspective, but even just getting them comfortable with the idea of DeFi.
It's just trying to figure out what are the building blocks that are necessary for a crypto-based financial system that addresses a lot of the challenges that you said. Volume is not liquidity, liquidity is liquidity. It's coming. And so when it's here, how do you address even security concerns? So I want to talk about security. I want to talk about custody. These are 2 big things that still hit the headlines, that if you are not necessarily in the space, we get it, we understand the minutia, the nuances, but the headlines are very obvious.
The issue here, and actually also to rebound on DeFi at the same time, DeFi is interesting because it's the crypto world that built up what the bank does with their balance sheet. They just aggregated together and did the same in the space of crypto, which is really interesting because, again, it goes back to the fact that you are able to build an ecosystem where it goes to the individual, and you can rebuild exactly what a bank does, but in an environment that doesn't require a bank. That's what DeFi is. Mm-hmm. The problem is then you have all the AML question there. But when you go back to the security and custody issue, the real challenge you have today when you start to get involved in crypto for an institution is either you're tech savvy, and then you start to build your own custody solution. You deal with a few custodians. You understand how it goes because the key is in a server and whatnot. But then it requires some basic knowledge in tech. Or you go the other way. You're like, I'm blindly trusting you. It may work. It may not work. But the problem is when the crypto goes away, you lose everything, right? And that's the fear that they have. And the third thing they're asking is either you have to change your habit. Oh, I have to buy a dedicated device, a ledger, a treasure. I have to get used to that device. The problem is like how many of us always lose devices left and right? I mean, you barely hold onto your phone, right? Well, what would be really interesting, which will eventually come, is the fact that now if you want to bring crypto to them, you need to bring it to their use infrastructure and environment. Like all those companies have already an HSM in their hand, their phones. And actually, when you think about it, all the tech, like every hedge funds, every banks, already have a very secure park of phones, for example, iPhones, that are built around all their users. And if you're able to bring to them an easy way to do their custody where they only need to integrate it to what they already know, my phones, my secure device I already have to approve things, then it will make the custody question much easier for them, because then they understand it's in a known environment. And right now it's not the case because we're asking them to know something they don't realize. Because for them, you own my custody. Yeah, but actually not really, because if I lose it, you lose everything. Well, you never lose a share of Apple. Like, you will always recover it one way or another. And that's where the challenge is. And I think that right now we still fail in getting a custody that is implementing the day-to-day operation of someone. Right now, if a fund wants to get into crypto, they need to talk to a Fireblock, a Copper, or whatnot. They need to get used to the way they do custody because it's different to their ecosystem. They need to put new procedure in place. They need to implement those procedures. They need the legal team to accept. They need the compliance team to accept. It's a lot of steps to be able to do just the custody side, regardless of the trading side. And that's a challenge that needs to still be overcome, and it's going to get there anyway. And that's the big thing, I think, for custody and security for people.
Does the industry need to police itself more? Does the industry need to establish more standards internally to address security, to address custody, all of those things? Because you're totally right. Because right now, the latest headline, somebody got majorly hacked through an Instagram account. These are coming every 3 weeks or so. White hackers, black hat, gray hat, whatever it is. At the end of the day, there's a lot of hats going on, and it's not a Panama hat, but a lot of people have lost some serious coin.
The big challenge you have is a lot of people that are involved in this industry on the crypto side are people that are used to that. So they don't necessarily realize the challenge that the other side of the fence face. And it's more people come from on the other side, like you mentioned the Telegram stuff. For any crypto trader, Telegram is natural. For a normal trader that went from Bloomberg, Telegram is insane.
Right.
And this is the thing where you still have that separation between the two worlds, where you have one side of the world that is used to those things, holding my phone, the key, holding the key, writing the word in a paper and sending. For them, it's natural. But for a trader of a hedge fund, it makes no sense. It's completely insane. They don't have to think about that usually. And that is something that obviously the crypto world has to start to continue to adapt, but also it's a fact that the industry, the traditional industry, also needs to accept that new type of set. Because what is at stake, according to me, is either we're going to end up into a centralized custody, or we'll keep the decentralized custody. And that's what is important to figure out.
So does the industry, the big industry players, the BlockFis of the world, the Coinbases, all of you guys are participating, but there's some standards that you can establish. Should the industry be talking together more? David, Matt?
Yeah, absolutely. Actually, I had that in my notes as I was going in preparing for the panel. The problem is you've got 50 plus exchanges. They all have different APIs. So in TradFi, you have fixed protocol. Everybody uses fixed protocol. Banks, exchanges, everyone can talk to each other. There's no issues in terms of settlement. You've got Swift. And then in crypto, everyone has a different way to integrate. And so it creates a huge barrier to entry. So yeah, that's good for some of the funds and firms that are looking for alpha. For the exchanges themselves and service providers like ourselves and the other people on this panel, it's not a good thing. So we need to do something about it. And also, security is a huge one. Thanks for mentioning it. It's probably the biggest and most prominent risk that we think about every day. The reality is we meet with a lot of firms that are custodial, non-custodial, MPC, whatever. They have a solution, you go through it, and then you realize there's glaring holes, and they haven't really thought about it from an institution's perspective. You need different levels of permissioning. How are the backup keys stored? All these things that institutions will think about and will want haven't been considered. But I think we're on the road. The kind of the institutional knowledge is spreading throughout the industry of how to do this, and all of the offshore, especially some of the offshore exchanges that have not wanted to come into the institutional fold and be very transparent and talk are starting to do that because they realize that's the next wave of money, how they attract the next wave of money to come in.
Matt?
Yeah, and I think building on both of those points, there is this transition that's occurring. and the tech that supports traditional finance is not able to support crypto. So that it's not able to support 24/7 markets. It's not able to support a lack of a closing price. It's not able to support non-batch processing in overnight, type scenarios with trade cycles. And so that has to evolve. Because of those systems, there are core controls that have been built into them to allow for safe use. So dual authentication of a withdrawal. Because we've seen in the past, an individual would take money and steal it, which is very easy to do in crypto if you were to not have dual authentication. And so, we at Coinbase, we call that consensus. Even calling it consensus is like a thing when you're talking to an institution. Because they're like, what do you mean consensus? In our compliance manual, it's called something else. And so you're going through multiple iterations of education to get to important controls that exist for managing other people's money.
Yeah.
And you're also doing that with systems that aren't designed to do that yet.
Like calculating a NAV. How do you calculate the value of an investment when you can't set a date and a price? And that's been a headache that I've heard from many funds. Actually, Deltec Fund Services solved that in the way they're doing their crypto fund. But the real challenge you have is usually you just do the closing price at the last day of the month if you have a monthly. But now in crypto, which one is the last day of the month? And which closing price? And which exchange? and all of a sudden, what was simple becomes a headache. And I remember talking to a big trading firm, trading desk, BCG, that wanted to offer crypto. And when I was talking to them, they said, yeah, we're going to offer it in regular trading hours. And I said, what you're going to do outside? Well, we're going to close.
Well,
yeah,
right.
But I mean,
They just missed out.
Don't you understand that the price of Friday night is not going to be the price of Monday morning?
That doesn't
And they said, yeah, but we don't have the infrastructure for that. We're not used to that.
But they've missed out, so much slippage.
Yeah, but now think about a bank.
But
think about a bank that get it going into crypto. They now need to have people 24/7, including the weekends.
Right.
That's something fairly new for them.
And around the world, probably need international teams. But Jack, I mean, if you, what are the challenges that you have to address, amongst your clients, your customer base, to help them understand that this does look very different?
Yeah, I mean, I think that, at the end of the day, it's just about the way that we really talk to people, right? I was at Mountain DAO out in Salt Lake City earlier this month. I think I told you guys this, and we had a congressman come, and he basically said, look, I sort of understand what you guys are talking about. He was asking a lot of questions. He was very interested, but he said, he's like, no one there actually understands what you guys are doing, right? When we talk about things, right, we have different words that we use, like even, let's just say TGE, for example, right? Token generation event. Random words and things like that. Like, they don't know what that means, right? They don't know, what a utility of a token means, right? And what these different projects are really building in this space. So I think that, at least from my personal perspective, is to kind of catalyze that next, merge or exodus, however you want to call it. It really needs to be just kind of bringing it to the masses in a way that they can actually understand. So one thing that we're doing is bringing DeFi to CeFi users by doing things like direct on-chain integrations for things like staking. I think that we currently have over 75 different tokens as part of our Earn platform.
Yeah.
Offering strong APRs across the blue chips and different altcoins. I think just trying to promote the different fundamentals of these projects through these on-chain integrations, right? Offering staking to a user who can't go and do that on their own, but with us, it's a one-click button. It's super easy, right? We spin up nodes ourselves. We do it all internally, and we handle everything on the back end, right?
Yeah.
So it's a matter of how you bring it to the end user.
Look, at the end of the day, you guys are all in, building the financial structure of crypto. We get it. But what is the point? What are we fueling? What are we funding? What is this financial structure going to fundamentally support? And that's an entire ecosystem called Web3.
Democratization of finance is what we have on hand. There's what is at stake with the technology you have in place. You can democratize finance. I mean, it's kind of insane. There's a company I've seen in one of the booths that offered the ability to track the wallet of large traders. Today's, you don't know what large trader does until they do their quarterly filing of stocks owning stuff, or if they have to cross the threshold. Now, you have access to that. And what is amazing is you can be, if you're a smart guy in your basement, that have the ability to build some smart algorithm, you can go in crypto and do it right away. You can't do it in trade finance because you need to be a certain threshold, be an accredited investor. It opens the ability to people that are smart to make money. And that is probably what is really the future of the infrastructure based on crypto, is to open that to people. Not only institution, but allow people to be as valuable as an institution. And that's what's going to be amazing, because it's a new way of doing things that is only available thanks to such technology, actually.
I do think it goes, but I do think it goes beyond just finance. Like financial and economic relationships are a critical part of our society and organization. I can get really philosophical about that, but but this is really about a new economy and a new technology that's built in Web3, that's oriented around moving away from sort of like advertising revenues as driving all of our technological interactions. That to me is super powerful. That to me is really cool, and that's what I want to support. When I think about that, there are parallels to currencies, layer ones. There are parallels to equities. Some of the projects, there's things like NFTs and art and ticket and like concert posters and stuff that are really cool. Like there's all sorts of new instruments being created on the blockchain, but they're designed with a different sort of paradigm, a different monetization strategy in mind. And that to me is like what's so exciting about what we're doing today.
Last question for the entire panel. I'm a huge believer in not necessarily the answers giving us answers, but the questions that we should be asking ourselves to reflect on, because everybody in this audience and everybody on this panel needs to reflect on what is, because you're starting to define what that future is. So if I could ask you, each of you, in one question, one sentence, what is the most important question one must ask themselves right now heading into this space? Shawn, I'll start with you.
Assuming all is equal and the regulatory boxes are checked, and assuming that the vast majority of the audience is an asset manager, a hedge fund, a fiduciary, an unlevered or a levered institution, I think the question that they ask themselves is, are there counterparties out there that I can trade with that can help solve my problems? And how challenging is it going to corral those counterparties to be able to help solve my problems? And how many of them are there, right? It's not one line, and I'm sorry. But it's a very, very challenging question to really ask, because if I'm coming into this space, if I'm sitting on the other side and someone asks me that question, I want to know, what are the difficulties to get in? What are the barriers? What are the challenges? Who can I trust from a custodial, from
I'm going
security?
to distill that into who's my counterparty.
Yeah, there you go.
Very good. Good context, though. I love it.
Thank you.
Jack.
I'll try to keep it one sentence. Can you handle the risk, I guess, is what I would say.
Love it.
I think there's just a very different mindset, right? Like I think once you start paying attention to crypto a little bit, you'll get a little bit interested, and then it's just a personal question of like, can you actually take that jump and get into the space?
Can you handle the risk? Greg.
How can I use that technology to truly open finance?
How do I better the world with finance? David.
This is a tough one.
It's tough.
I mean, I had several questions. I'm trying to distill it
Pick one.
to one question. Am I nimble enough
Great.
to enter the space?
It's an attitude, isn't it? Matt.
So I might be too jaded and cynical, having lived through the ICO boom and crypto winter and global financial crisis and tech stock bust and like all these things. But I think baking it down to first principles, what's the point of what I'm doing? And does it actually deliver a service and improvement? And if it doesn't, trading and profits and all this stuff is just noise, and who cares?
And my question would be, what don't I know? And how do I find out fast? Thanks, everyone. Thank you for absorbing, for listening, and for reflecting on all of these questions. I hope you take it back with you, and we'll see you at the beach. Thanks,
And
guys.
Matt and David are going to do a dance. We're waiting.
Thanks to our panelists, everyone.